Hey guys, so today we're going to be going through different methods of stop losses. Now I know for the intermediate and expert level traders, you're going to be thinking like, what a drop in quality in terms of what we're going to be going through. But in reality, too many people who I know who are full-time traders don't even consider what I'm going to show you here. And this is actually how to optimize a strategy to the best level possible, ensuring that you're using an optimal stop loss and how to get to it. So what we're going to do is we're going to go through a mechanical based strategy. We're just going to use my London breakout session using the 5-minute chart on the pound US dollar. And for those of you who don't know the strategy yet, go back and watch that video. I'm going to tag it in one of the corners. I don't know which one it is, but I'm going to tag that video. So I recommend you go to that video, make sure that you learn it and understand it. And then what we'll do is come back to this video and I will show you what I put together in a spreadsheet in order to optimize this strategy correctly. Now, we're only going to be going through stop loss today. We're not going to be going through the take profit. I know take profit is very key as well, but the stop loss is exactly what we want to be trying to figure out today. We're going to go with an optimal take profit, and I'm going to show you what take profit we're going to choose as well, just to make it really simple. But without further ado, let's jump across into the spreadsheet. So I created a spreadsheet here, really simple, and it's going to demonstrate what stop losses we're going to look at. Okay, so there's a few stop losses which people probably aren't even aware of. Now there is the nearest swing stop loss, and I'm going to demonstrate that on the screen. There's a 3-to-1, so a standard, basically you're risking 1 to get 3 back. So you're going to risk, let's say 10 pips, so your target's going to be 30 pips. Another one is going to be the average true range times 2. Okay, so the average true range is the number of pips during a particular time frame. So let's say you're looking at the hourly chart on the Euro USD, the average true range is probably going to be about 12 pips. So what we're going to do is just make sure that we give the market enough space to breathe by doing twice the average true range, which in that case would be 24 pips. You're definitely giving it enough time to be able to breathe and maneuver, and any sort of random spikes down you should be able to clear out the way. And then another one which is just a standardized target of 10 pips. Okay, so we're going to go with a target. Also, we're going to set a target, and I'm going to go into this right now actually. So where I mentioned the average true range, I know on the daily, for the pound US dollar, it's my favorite pair. I know this anyway, but we're going to go into the indicators. We're going to go and look at the average true range, and I'm going to change the settings on this to something which a lot of people are going to think, what the hell are you doing? But we're going to go with the number of trading days in a year, which I think is 252. I might be wrong with that, but it is roughly the number of days. And we're also going to change the color of it just so everyone can see this. And this is saying that it's 100 and, well, it's definitely working its way down, but this should give us the average from today. It should give us the average of the whole year, and it's saying 106. So really what we're doing with the London breakout, just to put this into perspective, with the London breakout, it's pretty much at the start of the day. We're looking at it from the European session, so we're doing from 7 AM this time. So from 7 AM, we're going to be essentially looking to try and grab the majority of the move throughout the day. Okay, so if it's going to move 100 on average, obviously some days it doesn't, like this day, practically nothing. With that day, it's moved 58, that day 65, that day 90, that day 121, for example. We're going to go with 50. We're basically going to chop it in half and make it really simple. So we're going to go 50 pips, because we want to try and get most of the days, like for example on a bull run like this, 87, 25, we're basically going to be able to get most days of full range. So it's a set and forget strategy as well, which we're trying to do. So you literally set your order. If it can be triggered between sort of 7 and 10 in the morning, cool. If not, then you take off the trade. It's as simple as that. But it's a rule-based strategy, and that's exactly what we're going to do. So we're going to drop down to the 5-minute charts, and something, just a little bit of a tip for you guys. We're going to get rid of the ATR again now. But just a little bit of a tip for you guys is, when you are doing a rule-based strategy like this, I prefer not to have any influence of what color the candles are. So lately, I've been making my charts like this. I am predominantly a price action trader, which means I only care about the flow of the market. I really don't give a shit what colour the candles are. I often change the candles anyway, like once for every month or so I'll change the colour of the background just to keep my brain fresh. But in reality, when I'm backtesting, I try to, if it's just a mechanical based strategy based on a breakout, like the London breakout, I just use white candles or black candles if I've got a white background, and it just gets rid of any indiscretion or any discretion that you've got. I just find it really, really simple. We're also going to turn on the Asian session range, which you can find out which one it is if you go back and watch the London breakout video. And we are going to go back to August the 17th. We're only going to grab 10 days worth of data here. In reality, the more data, the better. Okay, so you'll want to test this maybe 100 times. You know, go back over the last 3 months or so, 3.5 months, get 100 days worth of sample data, build up a bit of a confidence around this, and you'll do absolutely fine. So what I'm going to do originally is I'm just going to mark up on the chart where we get involved with the trades, and I'm going to set the target. Okay, I'm not going to play about with the stop loss just yet, but I'm going to speed up the video here so you can just see, you can just watch me do it. And yeah, just in case you're asking or thinking to yourself, yeah, I've just scrolled back to the 17th because it started off with a winner. It doesn't actually make a difference if I went back 10 days from today. It just ends up on a winner that way, but I prefer to start off with a winner because it looks better on the video. Hope you don't mind. But the results are actually the same. Another thing, just in case you're wondering, is that what a lot of people do, and I notice this with some of the traders out there who are actually just YouTubers and marketers, when they go to, let's say for example, we know this candle is the breakout candle. When do you get involved? It's not actually on that candle, it's on the next candle. So I see them place their orders right here on this candle. Well, you can't, because you have to wait for that candle to close. It's technically speaking on that candle where you get involved. Just something which I've noticed a lot over time, and it just really irritates me, and that's where you can usually spot a real trader from a YouTuber, but no, that's just me. But anyway, let's move on. Right, and there we are. So what do we have here? We've now drawn out on our charts winners and losers. Okay, so over a 10-day span, we've got... Hey guys, I hope you don't mind this quick interruption. Just a quick note to say that if you're liking the video, please do give it a thumbs up and subscribe, and maybe pay it forward by passing it on to somebody who you know is looking to get involved in trading. Back to the video. 4 winners and 6 losers, which is fine. It's not quite the 60% which I was getting on it. It has reduced a bit, but these were 5-to-1 trades. Okay, so what we were doing is we were looking at a target of 50. So let's go to our spreadsheet, a target of 50, and we want that to be the same with all of them. Okay, so we've got a target of 50, and what we're going to measure on here is the drawdown total as well. Okay, so this is going to help us get an optimal stop or a maximum risk reward ratio, which is going to be key for trading. So with all of my trades, you'll see in future videos and previous videos that I talk about, you know, I gain 1% or I lose 1% or whatever. Every risk which I put on is 1% of my account. I don't really deviate from that. If I do, I'm usually breaking my own rules. I'm starting to increase the level of risk, so I'm starting to trade with 2%, but in reality it's just 1% that I tend to use on a regular basis. So the drawdown is going to be essential for trying to figure out what an optimal stop is going to be. Now I'm going to mark in here, we've got the date, time, whether or not it's a buy or a sell, which stop loss we're using. So with a 10 pip stop, for example, we know with this on all of them it's actually just going to be 10. These are all the stop losses, this is the total risk reward, and this one being a 3 to 1, that is equals, I'm not sure what it is, it's 16.6. Okay, we're going to have to make that 17, so we're going to make the 3 to 1 a 17. The target would be 51 in that case, but we're just going to call it 17. And then we've got naturally our nearest swing and ATR, which are going to be calculated as we're going through. And then all I'm going to be doing on here is this is going to automatically calculate, in a second when I put the formulas in, it's going to automatically calculate what the risk reward ratio is, and then we're going to tally it up at the end. Okay, so we're going to have yes or no in there, because I, to be honest, don't know the formula to change the colour for me, whether or not it's going to win or lose. And if they lose, they're just going to be marked in red, and if they win, they're just going to be kept blank, and we're just going to do a tally at the end. So we can figure out which is the best stop loss to use with this strategy, because what you can do is, I noticed in the comment sections of the London breakout session, some people say, oh, I've only got a 50% win rate, or I got a 55% win rate, or I got a 40% win rate. What a shit strategy. When actually, no, it's not a shit strategy. You need to get a better stop loss. The risk reward ratio needs to be increased, not the win rate of the strategy. And that's where a lot of these YouTubers go wrong. They don't tell you where you can actually improve on a very basic strategy and make it into an absolute killer. Now, if you gather enough data, let's say, for example, you go out and you get 100 days worth of data. Let's say you get 1,000 days worth of data. Go back over, 5 years worth of data or so, and you can figure out, right, okay, the London breakout strategy, I'm just going to make this up, the optimal target is 62 and the best stop loss is 6. You know that you're going to be getting basically a 10 to 1 trade every time you win. And if you win, say, I don't know, let's call it 50% of the time just to make it easy, that is one hell of a strategy. You're going to be multiplying your account damn fast. And that's one of those strategies where I wouldn't be risking 1% per trade. It'd be like a lot more, because mathematically it works. Okay, so we're going to be going through this. I'm going to again speed up the video because you don't want to watch me try and figure all this out, and I'll make mistakes and I'll be going back and stuff, but this is where I'm going to be speeding up the video for you and hopefully come back with a decent result. Oh yeah, I've got to bring back the average true range. So the ATR, and for the ATR on this, we are actually just going to use the standard settings of 14. Okay, but with the daily, to get the full range, I wanted that to be accurate, so we had a realistic target, but we're just going to go with the standard 14 for the ATR. And to be honest, I don't know why it's 14 as a standard, but we're just gonna use it. So in this example, just to demonstrate, we are entering on this candle here. The average true range shows 0.00040, which is 4 pips. Okay, so it's just showing over the last 14 candles that the average true range from the high to the low is 4, but we're going to be doing twice the average true range. Okay, so our stop loss is going to be 8, but it's not going to be like that with every trade. And if you see me typing it into here as well, so I go into the settings and I do 80 ticks. Each tick is a pipette, okay, and we all know there's 10 pipettes in a pip, so it's 80 pipettes or 80 ticks in 8 pips. Oh, too many words. Right, here we go. Here we are. So that worked beautifully. That is beat. Now then, with all the formulas in there, it looks a bit of a mess, but it will get easier, trust me. So I'm just going to go through and input all the data. Something which I wanted to point out as well is that data is absolutely king when it comes to trading. Now, a lot of people will disagree with that, but the more information that you've got at your fingertips, the better you can manipulate a trading strategy to favor you for the better. I usually, with my other spreadsheets, I pack in as much data as I can. This is a very much an abbreviated version. I've only got the date, the time I've entered, and whether or not it's a buy or a sell. In reality, buy or sell doesn't even matter. The time is quite important for me with what time I'm entering, because I want to know realistically with the London breakout session how long am I going to be sat at my desk, because I am really impatient and just by nature, and I also am lazy as hell, which means that I like to sleep in a bit, so I don't really like to be sat at my charts at 7 AM unless there's a good reason for me to be there. So if most of the trades are happening between sort of like 7 and 8, I need to be at my desk between 7 and 8. I just prefer being up really late at night because I can get a lot more of my work done. The time right now is 20 to 9 at night. It's not late, but you know, if you've got to be up for 7 AM, you've got to get a good night's sleep, right? So, okay, so I'm just going to jump in and just get cracking. Something I'll point out really quickly as well is that if it is just an outright loss, you know that's a loss. I'm just going with the largest number as the maximum drawdown. So the drawdown total 12.3. It's just a loss across the board. I'm going to mark this in red, so this won't be added in our totals apart from the loss will be counted. So on this it would be no, 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 no. Some of them will have some wins and some losses, but obviously you'll be deducting the losses because it will be -1, and you just take that from the total at the end so we can find out an optimal, okay? So this one is a loss, and so is that. And we're just going to try and make this really easy. But it's good to see that it's usually 7:30 at the moment that you just get involved in a trade. Mechanical stuff, nice and easy. One other thing, so the reason why I do have buy or sell, in this example it's not actually relevant, but the reason why I do have this is that usually next to it I have higher time frame confluence. So which direction is the market going? Is the market currently in a downtrend? If so, how is my trend following element working versus my counter trend? So if the market is in a downtrend but I'm buying, am I winning more than 50% or am I losing more than 50%? Does it matter on the total risk reward ratio, etc.? There's a good reason for adding multiple different things. Also, you can add into your spreadsheets, and I will go through this in a future video. I can go through your spreadsheets with things such as, what was price doing before the move down? So, if price has just come down and shot straight down, was it consolidating? Was it creating a W pattern? Was it an ascending channel? Was it a wedge? Was it a flag? What was price doing just before? Had it just spiked and come back down? Having all of that information is really key, because the more data which you've got, you can start to build up a really, really profitable trading plan. And this is essentially what you would pay a lot of people for on courses, to try and figure out how to create your own trading plan. But it all kind of starts off with the data which you're collecting. A lot of it is subjective, but you try to make it as non-subjective as possible, like what I'm doing here. Right, now that we have done all of that, what we're going to do is we're going to tally up the scores. Okay, so with this one, for example, we are going to calculate 1, 2, 3 wins, which doesn't sound like very much, so 3 wins minus 1, 2, 3, well we know it's 7, so the 3 wins minus 7, because it's 7% that we've lost, so equals sum 3.85R basically with this one, and that gives us 6R, which was the 3 to 1. So the nearest swing was still profitable, which is the way which I currently do it, but this one is looking even better. So just going with a standard 3 to 1 on a 50 pip target. Not bad. Boo, we've got a loser. We've got a minus figure. And this one, we have an FTMO pass in 10 days. So 14R, which isn't too bad, just by going with a standard 10 pip stop. Now, here's the good bit. Well, what we do with this one, it should be average, but I don't know how to do it. So equals sum winner plus winner plus winner plus winner divided by 4, because there's 4 of them. Call it 7 pips. So in these instances, if the max was 7, let's just have a quick look and see if this has worked out correctly. So right, so that's interesting. Now, the optimum stop loss of what we've been able to figure out was 7.14. We're going to call it 7. Now, according to the winners on here, the maximum drawdown, you'd have only got 2 winners out of 10. So you calculate the winners, which is a standard 7.14R, but you'll have 8 losers. So you just multiply, 7.14 plus 7.14 minus the 8. And you get 6.29 as a total. So the best stop loss for this strategy so far, at least just with the 10 trades that we've taken, is actually just setting a 10 pip stop loss on the London breakout. So how good's that? So yeah, what I'd been doing previously, which was going behind the nearest swing, I've actually got, I've gone from 3.85 as the return, the rate of return, which is your risk reward ratio, to 14, which is pretty impressive. Really impressive actually. 5R plus 5R plus 5R plus 5R. Excellent. And what we could do even further is we could look at those winning days. That's going more into a take profit strategy. But you know what, I'm going to leave that for another video. But you can really maximize on a larger sample size. We could really maximize and get more than 14R. But 14R in 10 days is not bad. So what I'm going to be doing, just based on that, is I'm going to be doing more backtesting on the strategy again. Probably go back over the last 3 months, just using a 10 pip stop, and see what I come up with. You guys go back and do some back testing, maybe use another optimal target, maybe 9, 8, 6, 6, 7, 5, I don't know, whatever. Let me know how you get on. But that is essentially how to make use of stop losses in order to hit a solid target with any strategy. So all the strategies that you find out there on YouTube, question them for a start, go back and do your back testing, and put the data into a spreadsheet, and just make sure that you track as much information as you can. This is, as I said before, an extremely simplified version of a spreadsheet, and this is just the London breakout stuff. If you guys want a copy of this, I might put this on Google Drive and just share the link for you so you can get the template at least. Yeah, I'll make that my gift to you. You guys can have the template if you want. It's dead simple, just take a screenshot and copy it. But I've got a few more complicated spreadsheets, a couple which I've borrowed from other people which I will not give out, but the ones which I create myself, you are welcome to. But yeah, so that's how to optimize your stop loss in order to maximize the most from your trades. Next video on this topic is going to be optimizing your take profits and your targets, and that is also from a professional trader's perspective, not looking at half of this YouTube bullshit out there. It's looking more like how a real trader trades. All right, and again, it's based on statistics and mathematics, which is how you win at pretty much anything in life. So yeah, sweet, thanks.